Okay, the time being 10:31 and I see all members present, we'll get the meeting underway. So this is, the five of us are here. We'll start with introducing ourselves. I think we all know each other, but just out of formality's sake, we'll introduce ourselves and then we'll nominate you should all have a agenda in front of you. We'll nominate a chairman, a clerk. Keen Wong of the DRA will present the tax expenditure report of the DRA, most recent one being fiscal year 2022. 2023 won't be out for another, what, month or so, or December? Okay. Then we'll discuss next steps, plan our next meeting date, and adjourn. So let's start by introducing Senator D'Alessandro.
Senator Lou D'Alessandro, I represent District 20. That's Manchester Woods, 2, 3, 4, 10, 11, and 12.
Thank you.
Representative Fred Doucette. I represent Rockingham 25, the town of Salem.
Thank you.
And Dick Ames, I represent, I'm House Ways and Means Committee, and I represent the towns of Jaffrey and Dublin in Cheshire County.
Thank you.
Senator Tim Lang, District 2, Chair of Senate Ways and Means, and Senator D'Alessandro forgot to add that he's my Vice Chair of Senate Ways and Means as well.
Thank you. And I'm John Janigian. I am Vice Chair of the House Ways and Means, and I represent Salem, which is Rockingham District 25. Okay, first order of business is to nominate a chairman. Do I have any?
Mr. Chair, I nominate you as chairman.
Okay, do we have any other nominations? All right, seeing none, I cast one vote for myself, John Janigian, and I am now chair of this committee. Yes, Senator.
I nominate Representative Ames as clerk.
Do we have any other nominations for clerk? No. I nominate Senator Tim Lang. Thank you. And I cast one vote for Senator Tim Lang to be clerk.
That was going to be a long meeting. We just sat here waiting for one of us to volunteer. So,
Thank you, Senator. Okay. Ian Wong from the DRA, call you up to present the tax expenditure and potential liability report. And if you would, before you start, if you could both introduce yourselves.
Good morning, members of the committee. My name is Keen Meng Wong, Tax Policy Counsel of DRA.
Good morning. My name is Lauren O'Sullivan. I'm the Senior Financial Analyst at DRA.
Today we'll be presenting the tax expenditure and potential liability report. This latest report is for fiscal year 22. As mentioned earlier, the fiscal year 23 tax expenditure and potential liability report is due on or before December 15th. So that we have not started preparing for that report yet. We'll soon be doing that later, in probably later in the year. To start off this tax expenditure and potential liability report, I guess just to say that this report is to provide the committee with the tax expenditure or the credits that were claimed against the business taxes, as well as any potential foregone taxes for a listed amount of credits that is available that's listed on RSA 71-C2. And those credits, namely, are the Community Development Financial Authority credit, or the New Investment Tax Credit, the Economic Revitalization Zone Tax Credit, the Research and Development Tax Credit, the Coos County Job Creation Tax Credit, the Education Tax Credit, the exemption for qualified regenerative manufacturing companies, and that's not a credit. That's essentially as an exemption from taxes, and then the Career and Technical Education Center credit. This report also covers the net operating losses, the business enterprise tax credit, the credit carryovers from overpaid business taxes, and insurance taxes. Throughout this report, there is going to be mention of whether a credit is a cascading credit or not cascading credit. And that explanation is provided on page 3 of the report. Essentially, a cascading credit is a credit that is, when taken against the business enterprise tax, is also deemed to be a taxes paid by the business enterprise tax and taken as a credit against the business profits tax. So starting from a general perspective, any business enterprise taxes that's paid by a business organization can be taken as a credit against their business profits taxes. So that's not a cascading credit. That's just how the credits for business taxes work. For on page 3, you'll see the examples of taxpayer A where there are no other credits. So the taxpayer A has a enterprise tax liability of $2,500 and a BPT liability of $7,500. So the BET taxes that the taxpayer pays, the $2,500, is used against the BPT, and you see that $7,500 less $2,500. And so the total taxes that's being paid by this taxpayer A is $5,000. So that is the general starting point of tax credits. And then in taxpayer B's situation, where the taxpayer gets a credit, but that of $2,500, but that's not a cascading credit, so that is applied against BET. So you see here that BET $2,500 original liability less the $2,500, you have zero BET taxes, and then for BPT it's still $7,500 because there's no BET taxes paid. So in this situation, the taxpayer B owes $7,500. And then in taxpayer C scenario, where there is a cascading credit, so that $2,500 first applied against the BET, and then it cuts down the BET to zero. However, that $2,500 can then also still be used against the BPT. And so 75 less 2,500 is 5,000, and therefore the total tax due by taxpayer C is 5,000. So that essentially lays out the concept of a cascading credit, and that applies to some of the credits on this report are cascading credits, and some are not. So this just gives out the baseline information on that. So moving on to page 4, it just lists out what I mentioned earlier. What are the credits that will be mentioned on this report? And page 5 provides a brief overview of the workings of the credits that's laid out on this report. Here you'll see listing each of the credits, the statutes that applies to these credits, and then the taxes that is applicable to these credits, and then the cap if there is a cap on the credits, and so on and so forth. So this is a very good reference point when you're reviewing each of the credits. You can refer back to this page and look back to the general overview of each of these credits.
Can I just ask a question?
Mhm.
So the current year cap on program. That's total of all. So if we look at the first one, CDFA, new
Yep.
investment, the 5 million, that's for all taxpayers combined. That's the limit.
That's correct. So the CDFA, I believe CDFA is it's administered by the Community Development Financial Authority, and so they will issue a credit out to those contributions that they received for that particular year up to $5 million.
Thank you.
Wait till next.
Okay. Representative Ames has a question.
With regard to cascading credits, I'm wondering if you see any rationale for the difference, the picking out, what do we have? We got 1, 2, 3 of these tax expenditure programs to have the cascading credit and another 4 that do not have it. Can you discern anything other than maybe it just happened that way?
I believe this is all is potentially a policy decision made by legislature when they enacted these credits. So I can't say much further than that.
Okay.
Okay, we can
Right.
continue.
And moving on to page 6, and this is also another page with summary information. It lists out the amount of credits that's used on each of the credits that's then provided in more detail in the later parts of the report. And I'll move on to page.
So, so that's the amount used as of as of 2022. So if I look at research and development tax credit, 5.308 million, that's only that much was used out of 7 million.
Yes, that's the amount of credit that that was claimed on the returns that were submitted in fiscal year 22. So these, yes, that's a good point, Representative. So these credits that's utilized here are captured for the returns that's submitted in fiscal year 22. Returns that's submitted in fiscal year 22 could be, could be late returns, could be returns that's submitted on time. So it potentially could be tax year 21 returns, could be older returns,
I
but
see.
whatever returns that were received by the DRA during the fiscal year 22 period.
Thank you.
Can I ask a follow-up to that?
So they do not,
Yes.
they do not correspond to the program year caps. So that's where you will see that timing difference.
So I guess that's my question. So I'm
Yeah.
looking at, and using the R&D tax credit as a great example, right? We authorized up to $7 million in tax credits, but we only got applied 5.3 million in tax credits were applied for. Does that mean that all, assuming the applying business asked for the maximum 50, I think it's $50,000 the
Yep.
maximum.
Right.
They, because we're not at the cap, they would receive the full $50,000 credit.
So what happens is that, as Lauren mentioned, there is a timing difference when the credit is applied for by the business organizations and when the business organizations file their return and claim the credit. So the caps here, as you mentioned, is the credits that's awarded, whereas the amounts on page 6 is the credits that's claimed on the return. So that with that timing difference, you could potentially see, oh, why are some of these credits, maybe the amounts are higher than what the cap is. That's because, well, the taxpayers are holding on to the credits. Some of the credits can be carried over too when they're not using in the year that they claim it, and they in the following year, and they claim the credit. So all that accumulates, and they could potentially raise the amount of credits that's claimed higher than the cap that's provided.
So again, if they didn't have a tax liability, they can hold that credit for a following year when they may have a tax liability.
Right.
And you know how long that carry forward is?
Depending on the
Each
program, yeah, each program is different.
So then in this case, it's 5.3 million, but there are scenarios where people held on to them you could go over 7 million.
Yes.
And also I'd like to add too, that's the cap that we can award. It's quite possible we don't receive enough applications, and some of these, the caps aren't met, and the other ones, we do meet the cap every year. So you also might see that too. You may only have 2 million on a $5 million cap that's actually awarded.
Follow up.
So again, again, my understanding, if I remember right from a couple of hearings, is that these credits though are prorated if we exceed the cap, right? Is that,
Yes. For the R&D credit, yes, that's how
so
it.
that means that at least for this reporting cycle, that the amount of credit used, it didn't exceed the cap, and therefore it wasn't prorated.
So, for R&D credits, there is actually, let me just double check here. There are a mixture of applications that exceeded the $50,000, and there are applications that's below the $50,000, and that combination. But then the maximum amount of credits that can be awarded is capped at the $7 million. But then once again, this 5.3 million is when they claim it versus when what's awarded.
Well, again, I'm just looking at the history of that specific credit, right? It's 5 million, 5.3, 5.6, 5.3, 5, 5.3, right? We never got near the cap of 7. And in theory, assuming the business asked for the maximum, they would have got the maximum because there was no cap on that. We didn't hit the cap, or if it was lower, that if they only accounted for $40,000 in a credit, they only got a $40,000 credit because that's what they applied for.
In total, the amount of credits that's requested for R&D did exceed the 7 million, and they were prorated.
Why would,
Now I'm confused because
why would they be prorated?
yeah, I'm trying to understand. We have the expenditures
sorry.
on page 9 of the R&D tax credit. Not one of them goes over $7 million. So why would we prorate anything?
The proration is for the 50 million. If you exceed the 50 million.
Oh,
then it's
okay.
a
So you're
cap.
just saying that they reached the cap, and therefore they might have been eligible for $100,000 in R&D credit, but because we have a program cap of 50, they only receive 50. So that's the proration, but not because the cap of the actual program was exceeded. It was the cap of the individual applicant was exceeded.
The requested value.
Am I right?
I would say yes.
Yeah, I think so too, but I just want to make sure I'm clear. Because I'm assuming we'll have similar questions on the other.
Yeah.
So, wait, hang on.
So I understand individual application may be prorated because they're asking for more than they're entitled to by law. So therefore, they asked for 65 because that's what they paid out for R&D, but they're only, because the cap is 50, we've prorated it down to 50 and given them the max. But what we didn't do is, I was entitled to 50, but I exceeded the cap of the entire program, so therefore I'm only getting 45, right? So we didn't do that. We only did it on the individual basis based on the maximum per user cap. Thank you. Sorry, I didn't mean to go off on a.
No, it's
Okay,
Okay.
so we'll go on to the first credit, which is the Community Development Financial Authority, or the new investment tax credit. So this credit is administered by the CDFA, and it's essentially we can't talk too much about the administration of the program because that's administered by the CDFA. And what we do know is that it is this credit is a cascading credit, and it may be used against the BET liability and then used against the BPT liability. So the credit that's used, that's amount reported and used in fiscal year 22 were 211 taxpayers, and then the amount of credits that were claimed in fiscal year 22 was $4.2 million. And you can see from a trend from fiscal year 18 right to fiscal year 22, there was a slight decline from fiscal year 2018 to 19, and then it went back up to fiscal year 20. Oh, sorry, it went back down for fiscal year 19 to fiscal year 20, 164 down to 144, but it went back up in 21, fiscal year 21, and continuing to increase in fiscal year 22.
And this is an example of the timing between the awarding of the credit and when it's claimed. So what you see here, the fiscal year 22 number exceeds the 3.75 million. But when we looked at how it was awarded, they were awarded appropriately at that cap for those years that they were eligible. But it's just the timing of when those returns were filed.
Okay, so in any one year, you may exceed the cap in terms of the absolute number, but each year the amount awarded was always capped.
Correct.
That's
Okay.
correct. And it's this CDFA that awards the credit amount. Yep.
I'm sorry, say that again?
It's the CDFA that awards the credit.
Okay.
And then the taxpayer claims it on the return, and then we capture that
Right.
information.
Okay, Senator Lang.
So again, I just want to, again, I just want to clarify on this, is that this says a 75%, the credit is 75% of the actual credit, for lack of a better phrase. I don't know how else to say that, but it's kind of a weird statement. But we have $5 million authorized up to, but they only get 75% of that, which is 3.75 million that could be awarded in credit. So people can donate up to $5 million to the program, but they're only going to get 3.5, whatever the number is, 75 million in possible credits.
Correct.
Thank you.
And you can also see that from this credit, that there's a carryover provision for this credit. So before this, there were questions about, which one has a credit carryover, and this one has a credit carryover up to 5 years.
Right.
All right.
Any other questions on this one? Seeing none, I guess we can go to the next one.
Right. The next credit is the Economic Revitalization Zone Tax Credit, or the ERZ tax credit. This credit currently is set to repeal effective January 1 of 2028. And this credit is also not administered by the DRA. It's administered by the Business and Economic Affairs. And it is to encourage the payroll and capital expenditure of the companies in those designated economic revitalization zones. So this ERZ tax credit shall be applied against the business profits tax first, and any unused portion will be applied against the BET. And then any further unused portion of this credit can be carried over for 5 years. This is a cascading credit. And in fiscal year 22, there were 41 taxpayers that received this, that applied and claimed this credit for the total amount of $528,000. Any
Now, is this
questions?
expiring in 2028 because it was tied to the Jobs Act of?
I believe I don't believe so. I'm not sure, but it was something in the laws of 2020. Initially, this ERZ credit has an earlier expiration, but legislature has seen fit to actually extend the repeal date year over year, and now it's set to expire January 1, 2028.
Okay, thank you.
Right, moving on to the R&D credit. So this one is administered by the DRA. Some history on this. It was initially due to repeal on July 1st of 2015, but then that repeal date was repealed. So it's not
So-
going to be, there's no sunset
There's no end date,
this, yeah,
okay.
on this R&D credit.
And, on the first one, there was no end date either, it's a CDFA,
Yeah, no.
okay.
And so this credit is calculated on the wages, the qualifying wages that's paid by the taxpayers, and these wages are related to R&D expense wages. And as discussed earlier, each taxpayer shall not exceed the $50,000 limit on the claim on the award of the R&D credit. And then the cap is $7 million for the amount of R&D credit that is awarded each year. This is not a cascading credit. For fiscal year 22, there were 235 taxpayers that actually claimed this credit, and out of that, it amounts to $5.3 million of credit for against BPT and BET.
Thank you. Any questions on R&D?
I just, one quick one clarifying again. I just want to make sure I'm clear. So when we're looking at the fiscal year 2022 expenditure of 5.3 million, that's when the credit was applied to their tax liability. So it may have been incurred in a prior year, but it wasn't actually used. And these numbers are representing when that credit's used.
That is correct.
Thank you.
Thank you. We continue.
Moving on, page 10, that is the Coos County Job Creation Credit. Then this credit is administered by the Business and Economic Affairs. And so this credit is targeted to Coos County. It's to foster the creation of additional high quality jobs. And the definition of high quality jobs is wages that is greater than 150% of the current state minimum wage. This credit shall first be applied against the BET taxes, and then any remainder shall be applied against the BPT. Any unused credits can be carried over for 5 years. And this is another one of the examples of a cascading credit. In fiscal year 22, there were 24 taxpayers that claimed this credit, and it amounted to $96,000. Any
Do we, it looks like a significant drop. Do we have any idea of what caused that?
We don't have a lot of details on it because this is administered by the Business and Economic Affairs. They issue the award of the credits. That agency potentially could see could maybe provide information as maybe how many credits were awarded each fiscal year. But all we can say is that the amount of taxpayers that claim the credit has decreased. Yeah.
Okay. Any other questions? No? Seeing none?
The next credit is the education tax credit, and this credit is administered by the DRA. And this credit is based on the amount of the donations that's made to approved scholarship organizations. The tax credit is against the BPT, BET, and interest and dividends tax, up to 85% value of the donations made. And of course, with the repeal of the IND tax, the early repeal of the IND tax in tax year 24 onwards, so you will see that the application of the credits will not impact the. I mean, probably more if the individuals who were claiming this credit will not be able to claim this credit anymore. And if there were business organizations that were claiming IND taxes, they will not be claiming the credit against their IND taxes, potentially then moving it to their BPT and BET taxes if they have any. This credit award is capped at $5.1 million. And it is not a cascading credit. And this credit issue may be carried forward for 5 years. And then the number of taxpayers that claimed this credit in fiscal year 22 was 120 for a total amount of $1.5 million. And you see that trend of increasing from fiscal year 18 through fiscal year 22 in terms of the number of taxpayers claiming this credit.
It's interesting, we're nowhere near the cap, but with the number of taxpayers increasing, maybe it'll get there at some point. Representative Ames.
Yeah, I was looking at the report filed last year, I guess, 2022, by Patrick Abrami for this committee. Said about this tax credit that he noted that the tax credits amounted to 1.909 million, which is the number we have here for fiscal year 21. And then stated an expectation that there would be more growth than there has been. So I know you really aren't on top of the details of what's happening with these education tax credits, I imagine, because it's a Department of Education managed process, but I may be wrong about that. I'm just curious about what is happening, the actual use of the tax credit. Well, the amount charged was 1.9 last year and 1.545 this year. So what's happening is the question.
Once again, this could be also a question of when the credits were awarded versus when the credits were claimed on the return. Yes, we do see a drop from 1.9 to a 1.5. And I think that is the amount of credits that were awarded could potentially have been higher than that. But then the amount that's claimed in fiscal 22 is showing that $1.5 million.
Well, this is just my guess, but if I look at fiscal year 19 to fiscal year 20, you went from 74 to 110, a huge increase. And my guess is not all those were taken right away. They got the credits, they didn't use them right away, and then it gets reflected in that huge number in 21 of 1.9 million. And then you see the numbers moderating to a huge degree. Now it's just 6 more and then 4 more. And thus the drop kind of makes sense because now a lot of those pent up credits have been used. Just a guess based on looking at these numbers.
I think it would be, if we could manage it at some point, it would be worth having in the two funds that actually administer and make and issue the awards to for scholarships, because last year when we Abrami's report states that the scholarship fund indicated that 698 scholarships in 2020 to 21 were granted, averaging $2,882 per scholarship. So the obvious question is, what's happened since then?
Yeah, I mean, it's not a bad idea. And one of the things we'll discuss after this is in Patrick Abrami's report, he mentioned that they analyzed 3 of the 7 funds, and that was one of them. So there's 4 that weren't looked at. So we may have to look at how much time do we have, and maybe we should look at those 4 instead of looking at this again, although I do find merit in your comment there. Senator Lang.
So again, I just don't want to make sure we don't confuse. The 1.5 million is not the amount that was awarded in scholarships, right? That is strictly the amount of credits that were applied to an individual's returns. So those things are not equal.
Right.
So there may be in the fund more money than was, and we can talk to, Kate Baker and the Department of Education what that, on the purpose and the usage
Yeah,
of that fund, but it looks like Pat did that last year. But I just want to make sure everyone's clear. 1.5 isn't the amount that was issued in scholarships. It was strictly the amount of tax credit issued to businesses or individuals that were applying either IND tax, BPT tax, or BET tax, and donated to that organization, and therefore was eligible for an 85% return on a tax credit. So, and that's what that represents, is the 85% of the tax credit that was issued.
And also, I would like to add, you had mentioned the 698 credit scholarships awarded at the average $2,800. So that was in 2021. In 21-22, I have that in front of me. It was 1,171 scholarships were awarded, so nearly double, and that was at $2,943 was the average scholarship. So the average allowable scholarship goes up every year, and that's based on an inflation adjustment. So then for 22-23, it's now 2,995 for the average, and 1,443 scholarships were awarded. So that is growing. There are more scholarships being awarded.
Thank you.
You're welcome.
I'm sorry, what was the last year, or I guess? last year
Sure.
number?
So the scholarships awarded, this is 22-23, and that is 1,443. And the average allowable scholarship is 2,995.
And the one before that, you said 1,171
71.
scholarships, and what was the average award?
2,943.
Thank you.
You're welcome.
Okay, thank you. Continue.
And the next tax expenditure is the exemption for qualified regenerative manufacturing companies. This is administered by the DRA. Once again, this is not a credit. Essentially, it is an exemption from tax, from business profits and business enterprise tax. These entities that qualify as a qualified regenerative manufacturing company, they submit an application to the DRA saying that they are these kinds of companies, and then they are treated as not business organizations, and they would need to annually file informational documents to us to maintain that status. Because the number of qualifying companies is less than the disclosure threshold, we're not able to provide more information on this. This exemption expires for taxable periods beginning after December 31, 2027.
Maybe I missed the beginning of your description. Why you don't have a chart on this one like you did with the other ones?
Because the amount of QRMC, qualified regenerative manufacturing companies, is less than the threshold disclosure, disclosure threshold that we're allowed to provide. So we cannot provide we're bound to not provide any statistical information on this.
What is that disclosure threshold?
For statewide is 10 taxpayers, 10 records.
10 records.
Less than 10 businesses have applied for this tax credit, so therefore we can't disclose. Could be easy to determine which 10 might be.
That's correct.
It's
Is the
n-
sh-
Oh, I see, okay.
less than 10 have claimed it or have filed something. And that's the informational filing.
Okay,
Yeah, my apologies, Mr. Chair, as we spoke before, I have
Yeah.
a previous I have to keep. I'll catch
no
up with
problem.
you
Thanks
this
for
afternoon. My
coming by.
apologies.
Mr.
So,
Chair, I could
yeah.
just chat about this. So
Yeah.
this was my first term in the House. This bill was passed. And so again, the reasoning for this tax credit, the background behind this tax credit was we basically wanted to create the Silicon Valley of the East for regenerative medicine was the idea.
right.
And we've got less than 10 businesses, but some businesses coming in and doing it. We also recognize the fact that by its nature, startups aren't profitable. You know, most startups are not profitable. So the impact was going to be minimal to begin with because they wouldn't be paying BBT and they would be paying BET potentially. But again, we wanted to encourage them to come in. So we're basically giving them a waiver on BET in order to create a core focus for New Hampshire. And I think it's been semi-effective. We've had some good progress come out of that Army ARMI, the Advanced Regenerative Medicine Initiative in New Hampshire. So just for
Okay,
a little
thank-
background for members.
Yeah, thank you. So, and this also implies that no credits have been taken at this point?
It's not a credit, it's an exemption from business taxes.
It's an exemption, okay. And is there a limit on those exemptions?
There's no limit, no.
It's
Okay.
a 10-year pass.
Okay. I mean, I guess what I'm struggling with, I don't have a full understanding of it, is how do we know what the impact is to state revenues? Or we don't, Senator?
I was a co-sponsor of the bill that created this exemption, and I think it's an unknown at this point in time. The company that this was developed for has expanded in Manchester. It has grown. Now, as to the number of employees, et cetera, I don't know what that is, but there has been growth in that area. And another company in the regenerative business has relocated in Manchester also. So I know of two companies that would qualify for this at this point in time, both located in Manchester. But I don't think we have any idea of really what's happening in terms of activity there, financial activity. The only thing we do know is that DOD has given 2 grants for this entity to get going. One was for about 80 million, and the second was for another 20 million. So there's 100 million of investment on the part of DOD in this operation.
Okay. So it sounds like the good news is there's some activity
Yes.
happening, and the
there's
hope would be
activity.
that eventually these companies grow to the point where they are paying
Right.
business profits and BET. And
Well, again, as of December 31st, 2027, they'll all be paying BET at that point. Again, this was
Right.
basically a startup provision to allow businesses to get a foothold and get anchored in, understanding that in 10 years, that credit goes away, the exemption goes away.
Okay,
To
thank
retain
you.
the industry.
The next credit is the Career and Technical Education Center credit. This is administered by the Department of Education. So the purpose is to encourage charitable donations to regional career and technical education centers. The maximum amount of credits issued to all donors is capped at $500,000, and this program is scheduled to be repealed after fiscal year 2026. Once again, this was another example of where the information, the number of records is below the reporting threshold, the disclosure threshold that we can provide any information on. It is not a cascading credit though.
Okay, any questions? All right, seeing Representative Ames.
We should at least note that this is a program that's scheduled to be repealed after fiscal year 2026.
Okay,
So this part of the report is additional information, and this is on, then the first item here is net operating losses, and this is only applicable to the reduction in business profits taxes. There have been a few developments in the area of net operating losses recently in the legislature. One being that the net operating losses will only be apportioned once, as opposed to previously it was twice apportioned in the year that the losses was incurred and then in the year the losses was applied. So that has changed. Currently, and then also the calculation of net operating loss is now tied to the Internal Revenue Code of 2018. Previously, it was tied to the Internal Revenue Code of 96. And this the carryovers, the NOLs that's generated. New Hampshire has a cap on the NOLs. It caps it at $10 million per entity, and it's only available for any carry forwards of unused NOLs to up to 10 years. In fiscal year 22, there were 6,995 business organizations that claimed the NOL deduction. And total NOLs used after apportionment is $470 million. And then the average NOL use, so we take the 470 million and divide by 6,995 taxpayers or business organizations, come up with an average NOL per business organization of 67,237. And the total tax decrease due to NOL is about $36 million in total. And you see year over year, in terms of the trend, there is an increase in the number of taxpayers claiming NOL.
I guess I have a general question. I don't know if you know the answer to this. I mean, this is report of additional information. Is this committee is reviewing the tax expenditure? Is this considered
Yeah.
one of those?
Yes, it's here.
Okay, so there's more than 7 then. There's at least 8, or maybe more.
Mr. Chair, if I may. So one thing I will find interesting is that we were talking earlier about, like even on the Community Development Finance Authority, right? The actual taking of the credit was pretty low up until we hit 22. And then we saw a big taking, an increase over $1.2 million, an increase in CDFA from $3 million to $4.2 million, where businesses are actually, or individuals are taking that credit. And we're seeing the same thing here, I think, in this, is that we see 22 as an outlier where a significant number of businesses are taking credits that are that are available. So just as a comment, more than anything else, is that we're seeing more businesses use up those tax credits, which for this year reduces the amount of revenue, but it also reduces the liability because we're not having those credits hang out there either.
Yeah.
So it's a pro and a con in there, that the liability of the state's reduced because we don't have those credits hanging out.
Okay.
Moving on to the next page is page 15. That's the business enterprise tax. And so this business enterprise, any business enterprise taxes paid will be considered as a credit, can be taken as a credit against the business profits tax. And there in fiscal year 22, there were 38,000 returns that had a BET liability, and total BET liability reported was $219 million. And the BET used against BPT is $183 million.
So again, this is a 1-to-1 ratio. So if I have $1,000 in BPT,
Yes,
but I paid $100 in BET, I can take that $100, take it off the BPT liability,
exactly,
and I only have a $900 liability.
exactly.
Thank you.
In total, you'll still be that $1,000 because it offsets
Just where it
itself.
comes
Yeah.
from.
And also note that not all taxpayers will have both BET and BET. Some taxpayers might have a higher BET than BPT. Essentially, maybe those would be taxpayers with more payroll-heavy oriented businesses, like those, I guess, consultancy services with heavy payroll. Yeah.
So again,
Follow-up.
you actually struck me with a question though. If a person pays more BPT than they owe, they don't get a credit. They get a credit to follow that forward. So again, if say I paid $1,000 in BET, but I only have $100 liability, I just get the net zero out my BPT. I don't get it $900 back from the state.
No, it's not a refund.
Right.
No.
But it can be carried forward
Yep.
10 years.
Yes.
So that $900 difference can be carried forward to another year and used to
Correct.
offset future.
Correct.
Correct.
Mr. Chairman?
Yes,
Can I ask a
Senator.
Question?
Yeah.
How many entities are exempt from the BET in the basic statute? Who doesn't pay the BET?
Oh, there's a threshold amount of, I believe right now is 203,000 or something like that for business enterprise value. So if the the business organization's enterprise value is less than that, then they won't need to be submitting a BET return. Other than that, if they have any business organization or business enterprise that has more than that threshold, will be required to submit a BET return unless they qualify as a QRMC, then they will be exempted.
But in the statute, that certain entities are exempt from the BET.
And I believe even the 501(c) organizations probably, I believe they are also, they're not exempt. I believe they do have to file a BET return if they meet the threshold. But I need to double check that. Just
Okay. I just remember the implementation of the statute.
Hmm.
Okay, thank you, Mr.
Thank you.
Chairman.
So,
All right.
I'm sorry, so
Yep.
again, I think your question was, Senator, was are 501(c)(3) type organizations exempt from BET? And the answer is we're not sure right now.
yeah, I believe they are not exempt. I believe so, but I just need to double check that.
Okay, looking at the statute, there are many exemptions of the BET. I think anyway, I'll relook at it just to make sure.
All right. Obviously, if we can get, an answer for that, that'd be great.
Yep. And moving on to page 16, this is the credit carryovers from overpaid business taxes. This is the big issue with the CCOs. And once again, the latest development in this credit carryover issue is that for taxable periods ending on or after December 31, 22, the credits that's allowed to be carried over is up to 500% of the total tax liability for the taxable period, and then the remainders shall be refunded, and that cap will be reduced to 250% of the taxable periods ending on or after December 31, 2025, and then up to 100% only for taxable periods ending on or after December 31, 2027. So you see here in the for fiscal year 22, and you can see that the trend from fiscal year 21 to fiscal year 22, the number of credit carryovers has dropped from $20,000 to $17,000. But then you see the fiscal year 21 through 22, the amount of credit carryover has actually increased from 297 to 342. So I guess then the question is, are we not seeing the impact of this 500% cap? But bear in mind, this is information for fiscal year 22. So for fiscal year 22, mainly for calendar year filers, this likely would be for tax year 2020 calendar year filers, because tax year 2020, the returns are due April 15 of 21, and most of the filers actually file on extension, and then their returns we'll see their returns in November of 21, and that falls into fiscal year 22. So for tax year 22, this cap does not apply to those taxpayers yet, because it only applies to the for taxable periods ending on or after December 31, 22, the 500%. So likely you see, as Laura mentioned earlier during the conversation, is that we're starting to see some impact on this 500% cap in the current period.
So we started seeing very small impacts on the small and medium-sized businesses because they hit that 500 very quickly on their liability, and we started seeing that a little bit in April and a little bit every month. And this is the first month where it's starting to ramp up a little bit, where we see the number of refunds are due to hitting that 500% cap. But we're still probably not going to see it on the very large organizations and the large fiscal filers either later this year or even next year or when we get to the 250 cap.
So, I mean, I'm,
Extraordinarily high to hit 500 when you're very large.
right, so taxpayers themselves may or may not know about this law, but the DRA is saying, okay, you've hit 500 and you're sending money back.
Correct. Our system is set up to identify those and then to issue those refunds. And also, one thing we have noticed is that some taxpayers are electing to just keep 100% of their liability on the books and not take the full 500 that they still could have for even next tax year, because the 250 doesn't begin until tax year 25. But they are opting for the 100 now.
Senator Lang?
So do we have a list of the liability? Like, what is our outstanding liability for these credit carryovers? What's the gross number we're looking at hanging out there? And how many taxpayers hit the $500 threshold or will hit the $500 threshold? And what is the amount we expect to be refunded?
We don't have that ready quite yet. We know what is outstanding. I don't have that information in front of me right now. That is part of the fiscal year closing process. So we did provide that to admin services. I just do not have the number and the count in front of me. And we're only really evaluating refunds that are 10,000 or greater, or you requested a credit in tax year 22. So we haven't evaluated every single refund that went out the door.
So, Mr. Chair, I guess I'd ask for that because that's going to impact revenues. And I'd kind of like to have an idea what that looks like. If we know that, the 22 numbers, the 500%, how much, anybody who's above 500%, how much money are we refunding back? Because that's money that's not actually coming out of the general fund, regardless of revenues coming in. So I'd like to see what that net difference is looking like. And then the same, if we can, what we project out for 25, that reduction to 250, here's our estimated liability, and we're gonna be writing checks for this much money on January 1, to taxpayers, and what that number looks like. So we have an estimate of what those revenue or those expenditures are gonna look like.
That would be good. That would be good to get. Yes, Representative Ames.
Just trying to make sure I've got this. So before this change, taxpayer who makes an overpayment could choose either to leave it with the department or not, and if it was left with the state, it would be part of the revenue reported by the agency. Is that right?
Correct. And then it's
so
a
now
liability.
with this change, what used to be revenue and it would hang in there until maybe there was a subsequent change of mind by the taxpayer. What's changed is that now there's a mandatory credit, in effect, return of money to the taxpayer, which means that what we counted as revenue before under our different system will no longer be revenue in this new system. Do I have this more or less right?
The
So
timing.
it's essentially what happens is with the 500% limitation, anything in excess of the 500% will be refunded to the taxpayer. So that refund goes against the revenue, reducing the revenue number.
Yeah.
In a future year, though, but the
Well-
revenue came in a previous year, so
Yes.
we accounted for it there, but we're taking it off now
Yeah,
as a refund. So
right.
Right.
That's why it's important to understand what that number looks like
Sure
then
for
is.
budgeting purposes.
And then
Sure
also,
is.
we are proactively sending out letters to taxpayers that have credit and asking them to make a decision if they want, instead of just assuming leave the credit on account, we ask, please respond back if you want to leave a credit on account, or then a refund will be issued if there's no response.
Right.
So that's also another way to mitigate this liability that's on the books.
And you're doing that for all credits, not just over 500%, but all
Correct.
credits. Like you currently have X number of dollars on account with us.
Yep.
You want to use them, you want to check.
Okay, sounds good. Next.
So, and the last item here on page 17, that is the insurance premium taxes. And this is a credit against the business profits tax. So the insurance companies that pays this insurance premium taxes, the premiums that they pay can be used to offset against the business profits taxes. And here the total credits used against BPT for in fiscal year 22 came up to about $44 million, and the total number of taxpayers utilizing this credit was 273 taxpayers.
So that $44 million, that the state took that in as taxes on insurance companies, and then they deducted it from their BPT.
Yep, that's correct.
Yeah.
Okay,
So it's one or the other. I mean, it's.
right, yeah,
Yeah.
makes sense. Did you have a question? Did
No,
you-
I just want to make sure that the 273 doesn't represents insurance companies, not, you know, in some form that's paying this premium, this insurance premium tax. And then we're just saying that you can take that off your business profits tax.
Right, that those are the insurance companies that claimed the IPT against the BPT.
Great, thank you.
All right,
And that's
any
it.
other, do you have anything else, or is that pretty much it?
That's pretty much it. So we'll be starting to prepare the fiscal year 23 report later in the year. I think, so this report, this fiscal year 22 report was issued on December 22. So the fiscal year 23 report likely will be around the same time frame in terms of when it will be
Okay.
issued. Yep.
And for the purposes of this committee, we have to have a report done by November 1st, so we won't be able to include any of that, of course, but just like the previous committee to us looked at 2021 and wrote a report in 2022.
So,
Okay,
Mr. Chair, I think, if I make just
Yeah.
a summary. So there were a couple basic things we're asking for you to come back with information. One was the question around who pays BET and understanding better what that looks like and who's exempt from the BET. And then the other items were about the liability on the credit carryovers, what that looks like and how it's going to be hit against future revenues.
thank you. All right, any other questions for DRA? All right, thank you very much.
Thank you.
Okay, next on our agenda is discussing next steps, and I'm gonna definitely need a little help here figuring this out. If I look at Representative Abrami's report from last year, they did, and actually, Senator, were you on last year? Okay, so just Representative Ames, I believe, was here last year, so.
Yeah.
So it looks like Representative Ames last year, the committee addressed 3 of the 7 tax expenditures, but did not, it looks like, did not move forward with 4 of them: the education tax credit, the revitalization zone tax credit, the Coas County Job Creation Tax Credit, and the Community Development Finance Authority. So I mean, it probably makes sense for, I mean, the fact that, well, I guess I have just a general question that you may be able to answer, Representative Ames, is that our report is supposed to be in by November 1st. Is that the end of this committee at that point?
I had the same question. I didn't look at the statute. Is it here somewhere? or-
I mean, I'd be okay if it was. We've got plenty of other things going on.
Yeah.
What happened last year after that
We
report?
kept puttering along and we ran out of members. Senator Gaida resigned and he was gone, and it was just Abrami and me.
But then he dropped out before the November 1st. So then November 1st report came out. And then did you guys do anything after November 1st?
Oh, no, no,
Okay.
we were done.
All right.
So it says, it's funny, the Joint Committee on Tax Expenditure Review is hereby established to review all qualifying tax expenditures on a rotating basis every 5 years. And recommended continuance, amendment, or repeal of relevant provisions, right? That's our charge.
Right.
First meeting will call within 90 days of the effective date. Says every November 1st thereafter, the joint committee shall plan for any tax expenditures as subsequently enacted or amended and report required. So I'm guessing it's an ongoing, because we'll have to.
Yeah, that's
again
the way
next year.
that's the way we treated it last time. So we did I guess we called it an interim report of some sort for what is
By
now
November
this
1st.
November.
Right.
And then we did a fuller report a year later. So this report that we're talking about right now was just to cover ourselves basically and say we've had a meeting and discussed thus and so and a few more things. I'm sure we can find it. And then we carried on. So we weren't done.
Okay.
Yeah.
So presumably our committee would then produce another report for 2024, November 1st. And then the committee would be done because now it's a new
That's right.
biennium.
Right.
That's what happens.
Okay. So when that new report comes, I mean, it seems like there'll be no rush to, I mean, after November 1st, we probably don't have to meet again for a while,
Yeah.
whatever that means, but we'll figure it out based on, I think a lot of us are new, so we don't know how much work is it going to take. And depending on what we see and what we feel like we still need to do, we can figure it.
What we did was, I believe the report, the November this year report was short and reported that we met and had a presentation from DRA.
Right.
And might identify, maybe we should agree on this, a plan to proceed to develop information on the four tax expenditure programs that are mentioned in Abrami's report as not having been addressed yet.
Right.
And that would be our plan then. Then we would get together as soon as we can,
Right.
given all the other things that are going to be happening to us, and try to get it done. And I know that last time around, we just ran out of time and personnel because we lost Senator Gaida, and it was
Right.
a three-person committee
Yeah.
to start with, so we were in trouble, and we decided not to go much further and basically report it out.
So the requirement for November 1st is every November 1st thereafter, the joint committee shall file a report with recommendations for proposed legislation, including identification and review plan for any tax expenditures that was subsequently enacted or amended. So I guess considering we did the 3 last year, I guess my recommendation was take the 4 that weren't done last year.
Yeah.
Yeah,
And then
right.
understand we're gonna do the 3 next year. In
Yeah.
24, right?
Yeah.
So let's
Right.
keep that cycling of 4 this year, 3 next year, 4 this year.
that makes sense. That makes sense. The 4 includes the education tax credit, which we received information on, but we didn't engage in the discussion and analysis that we needed to do as a committee. So it was incomplete. That's why it's on the list.
So who came and talked to you though?
The Kate Baker, the director of the scholarship program organization, came and talked to us.
I guess I could reach out to DRA on those 4 and find out who
Yeah,
they think is the
yeah.
most
It was
appropriate
the
person.
in the other cases the what's it called? The business and development, the agency that administers the, I think the revitalization, the CDFA
Oh, yeah,
tax credit, they're different entities.
yeah.
So I don't have that
Okay.
on top of
All
my
right,
head.
so, and then what, to my question earlier, you have the 7, and then it looks like there's 4 other liabilities. I mean, it doesn't seem like that's not mentioned in Abrami's report, and do we, Senator,
Well, so
do we,
oh,
okay. Yeah. No,
my,
it
my
wasn't.
aide had it ready for me when I went downstairs, so it might be on your desk.
Okay. Yeah, and I don't know where I got mine. When I first was the first listed House member and I had no idea what this committee even did, I asked for some information and I got,
So again, the
That
two items that
memorandum.
are required on the report is potential liabilities against state revenues specifically, and it lists out some tax credits. And then credit and credit carryovers. So those are kind of the two that's listed on here we have to identify.
so it's not addressing NOL or business enterprise.
Well, I don't know. I gotta have to go look at, just get statute numbers.
Oh,
So I don't know
oh,
what all those statute numbers are. So
All
we'd have to go through and look up what each one of those statutes represents.
okay,
It's like other credits allowed under RSA 77, 77-A, 77-E, 77-G, 78, 78-A, 78-B, 82, 82-A, 83-E, 84-A, 84-C, and RSA 400-A against the business profits tax. So I don't know what all those credit programs and carry forward programs are by those RSAs. We probably need to identify those and make a,
yeah. Yeah, so that report,
I have.
doesn't even address any
No.
of those.
yeah, it
things.
didn't, that's what I'm saying. I don't know.
So,
I think it was because they ran short, and they ran out of time, and they gave what they had, they gave, and the rest be damned.
Something
So
like
we-
that,
and-
yeah.
and we may or may not be able to address all that,
Right.
given our tight time frame now.
Well, we have
But
2
we
years,
can-
right? So I think that we can specify, you just say that these provisions will be carried forward to 2024,
Okay,
November 1st report.
Yeah, I just meant by this November 1st, we're not gonna have
No,
reviewed all
no,
that.
no. And,
So,
and I think, you just use common sense and
right.
do what you can do and don't worry about it.
So maybe we start with, Senator, you had something else?
Was it, trying to do this for recall, but was it the major basic concern, the credit carryovers and the amount of credit carriers that were still remaining?
That was a huge concern of Norm's.
Right, huge concern, and how we were gonna address that as we move forward.
What he worried about was this cloud hanging over us that might cause damage, and that the cloud was that there were businesses out there who had on deposit with the state a huge amount of money, and they might someday look at the crystal ball and say, "Whoops, it's time for us to take all that
Right.
money back."
Well, my concern is that in talking to him, in that conversation was, again, if now we're being forced to issue refunds, what's that look like?
Hey,
And maybe we need to consider,
Yeah.
consider legislation to spread that out a little longer, rather than a 2-year cycle getting down from 500% to 100%,
Yeah.
right? So maybe that's possible legislation we want to consider to not have as drastic of an impact. We
Some of
wanna get
that
the money
may-
back, but
Some of that may be answered when he comes back.
When we
with
get the numbers, right.
Some additional information.
What it appears is PRA has addressed the credits by their new methodology, the letter, and if you
Mhm.
don't respond to the letter.
They just send it back, yeah.
Talk about a cascading effect. What effect is that gonna have on us? But those dollars are gonna go out the door.
Right. Yeah, that's why Senator Lang is saying maybe we stretch that out, because who knows? Yeah.
yeah, it's 100% a year. We reduce it by over the next 5 years rather than a 500 to 0, 500 to 100 over 2 years.
That's
Right.
fast, yeah. Okay, so then, for the next meeting, maybe we try to get those four, I'll have to find out who the experts are in those four areas. And we'll have presentations on those four.
You probably can't do them all at once.
Too much to do all
Yeah,
four.
too much.
I'm
You
So
know,
we're
sorry.
talking about which ones?
each one has a constituency.
Which one are we
Uh,
talking
So they were,
CDFA, right?
CFA and the whole
The
lot of-
economic
degree.
revitalization tax zone credit.
yeah.
R and
those-
D, was that already in his report?
That's already done, yeah.
Yep, so that's
Coas County job
the Coas
creation.
County. The education tax credit was done, but we'll need to review it again next year.
Correct.
Yeah.
The CT was done, wasn't it?
Well, wait a minute, he listed it as not being done.
Well, he listed some of it,
Thus, we
right?
decided
So
not
we
to move
have-
forward with concluding discussion on the education
There,
tax.
there
credit.
is a conclusions of required act, so they did do an assessment of it,
Oh,
but they just didn't, they said it needs a deeper dive as well. So, again, we're
So
gonna
you
do a
think-
deeper dive, we're just gonna put it off to next year.
okay. all
Right? So I
So
think
what you're proposing is CDFA,
CDFA, economic revitalization, Coas County, and the last one
And
was.
education. Education. It's all on the front page. It's the-
Well, again,
but what-
the insurance premium tax credit, right? Those are the four that he really didn't do, aren't talked about really in this report at all,
Oh, I see.
right? Those are the four tax credits listed by DRA as an expenditure that we have to look at. Plus, right, we have these other liability, under additional item, the NOL, enterprise tax credit, and credit carry forward, which I think we should do the credit carry forward this year. Right, an analysis
We
of that,
should,
right?
since
As a
it's
fifth
sticking
item.
its ugly head up. Yep.
So we give 5 items for this report that we're thinking about for November. And they are, again, CDFA, economic, Coas County, insurance tax premium, and the credit carry forward. And we should maybe focus on those for the next coming meetings.
insurance tax premium. So that wasn't one of the four that he didn't get done, though.
Right, but these are the listed again. I'm using DRA's acknowledged. So again, if you go to page 5, they list an overview of tax expenditures and amounts. Right?
You know, the insurance one is not very exciting. It's basically.
Yeah, I'm sure it's gonna be a really quick, but again, we should at least have someone come in and talk to us about it. Make sure we're okay and,
Yeah.
one paragraph and we're done. But at least we reviewed it and had a conversation with somebody.
All right, so CDFA, economic development,
Coas,
Coas County.
insurance, tax credit, premium credit, and then credit carry forward, which is gonna be the big one, I think.
Okay.
And that's, we're talking hundreds of millions of dollars versus these,
Right. Okay. So credit carry forward is DRA.
Yeah.
Insurance is insurance.
the insurance department and DRA.
Okay. Coas County, I'll have to find out who they recommend. Talk,
And just like I said, we may also choose to do next to nothing. We just need to have a statement in the report about it, because if I
Yeah.
remember right, the Coas County one expires.
yeah, but it doesn't expire till,
I don't remember when the expiration, did I write it down? But I thought they said that expired.
One of them does, yeah.
So some reason I'm thinking 2028, but that's what, someone said 2028, but I don't remember whether it was that one.
well, I'll find out.
So if it may just be a matter of, we just say that it's due to expire, we recommend it, we allow it,
Mhm.
right?
Simple enough. But we may still want to have somebody either send a statement to
So
us
that'll
or-
be, if I'm not mistaken, right, doesn't, BEA does that, Taylor Caswell. So he would have,
That's
He-
right. Yeah, that's
he
the
would
one.
come in both for COAS and the economic revitalization. His agency is the one that manages that.
Okay,
We'd have CDFA come in to talk about the CDFA tax credit, and the premium insurance is the insurance department.
I mean, it would be nice if we try to hit all 5 of these at the next meeting,
Mhm.
because then at that meeting, we can then discuss it after, we hear the input and say, okay, can we put together a report and not meet again? Or do we have to meet again?
That'd be fine.
I'm just thinking of my schedule is so packed between now and then. I'm sure you guys, senators, have so if we can do it, would you rather, we could start a little earlier too. We started at 10:30 today because Representative Ames had a conflict. If we started a little earlier, I don't know, what's the earliest? 9? Everyone's okay with 9? Actually, let's try to figure out a date. And then, we might be able done by 12, and that way we got through them. Okay. How does Monday, October 16th look?
What was the date? I'm sorry, Monday the
Monday,
16th.
October 16th. One of the key days.
Well, I don't know. That's
Oh, there's some sort of,
NHFPI conference, New Hampshire Fiscal Policy Institute conferences all day, and I know many people are going to that.
well, it's just us 5. I don't
Right.
know. Are you going
Yeah.
to that? The fiscal
Yeah.
policy?
What is it?
I don't know, what is it?
Oh, that's
Fiscal
a
policy.
NFPI.
Yeah.
Are you,
I put it down. I don't know,
I don't know if I'm going to
I,
it or not. I got invited to it.
yeah,
Yeah.
that's right. They've sent out a lot of notices, yeah. Yeah.
I
I mean-
can't do the 17th. I can do the 18th.
I have a dedicated funds committee meeting.
On the 18th,
Yeah, 19th I have Ways and Means.
and I have the Alcar.
Jeez. I'm available Friday the 20th, I guess. At that point, we're probably going to have to finish up or at least have a preliminary report. Does Friday, I like to try to stay away from Fridays, but does Friday the 20th?
Works
Work?
for me. That's okay.
What if we go back a week
What's that?
instead of a Friday? Why don't we look at like Tuesday, 10th of October?
Tuesday the 10th, sadly, I'm in LA for a few days,
Oh,
unless you guys want to meet and because the earliest I can do it for that, I think next week is probably too quick. Actually, I've got something, I got something scheduled, Thursday the 28th.
yeah, now we're pushing against
That's
the
probably-
report deadline November 1.
No, I'm back in September now.
Oh,
September 28th, but I don't know if that's too quick. That's a week from today. We got to schedule people.
A week from today, I'm out.
You're out?
I'm not here.
Oh, that's right. You're yeah, I think that part of the issue is you're gone that week and into October first week, right, Dick?
Yeah, October 3rd.
You're
I'm
gone
back
till the 3rd.
October 4th.
And then I'm gone from the 5th to the 12th, actually. So, yeah, the week of the 16th is the earliest I can. And unfortunately, Tuesday I have joint committee to study charitable gaming. Actually, you're on that too.
Which one? That's Tuesday.
Tim, that's Tuesday the 17th.
That's why I said I couldn't make it.
Yeah, Wednesday the 18th I have dedicated funds. 19th I have Ways and Means, so
What time is your dedicated funds?
10 o'clock. Oh, right. So you're. Okay, so Tuesday and Wednesday. Yeah, okay. That's, okay, so, and then Thursday I've got Ways and Means. Friday the 20th, what did we say about
It's
that?
okay with me, but
Friday the 20th, 9 AM. Yeah. Yeah, because actually the 5th one is DRA, the credit carry forward. I don't think that's going to take that long. Insurance isn't going to take that long.
I don't anticipate any of them will take that long.
They shouldn't take that long, so we should be able to get through them
That's
all
true.
and hopefully draw some conclusions and not have to meet again.
Do we say 9?
9 o'clock, October 20th.
9 o'clock, yeah.
And if one of these entities can't come and give us a report, then I'll ask for a written report so we can at least have something. All right. Yep. Move to adjourn.
Second?
Second?
Yep.
All in favor? Aye. All right, thank you, everyone.